Hello, I am CS Jasmine. Welcome to my channel. Today I will teach you the next form of business organization, that is company. For all the CS Foundation related videos, please subscribe my channel and press the bell icon for any update. This is chapter number 2 of first subject, that is forms of business organization. In this video, I will be telling you all about the next form of business organization, that is company. And I've already made videos on first 3 forms of organization, that is sole proprietorship, HUF and partnership. If you have not seen those videos yet, please go back and refer to the link given in the description box. Now, what is a company? Company is a form of business organization which is voluntary association of persons to carry on its business. Whatever people come together to form a company, it's their voluntary association. They decide on their own. Then it is given a legal status. It is a person under law. It is recognized under law. The capital of the company is called share capital. Whatever the investors bring in, the people who join to run a business, to run a company, they bring in the capital, which is called the share capital. And the total share capital, it is divided into number of units, which is called shares. And this, because it has a legal status, it is governed by the law that is called the Companies Act 2013. Now, company is defined in the below given 4 points. The first is it is an artificial person created by law. It can work on its own, as it is said that it is a person carrying out the work. So it is an artificial person carrying everything on its own, and it's created under the law, that is the Companies Act 2013. Then second, it has a separate entity, which means it is different from its members. It is separate from its members. It's not completely what the members are. It's not dependent on them. It is a separate entity. Third, it has perpetual succession. Perpetual succession means that the company goes on and on. It's well said that shareholders may come, shareholders may go, but the company goes on. It doesn't stop until it's wind up or it's liquidated for a purpose. But other than that, it goes on and on. The last is it has its own common seal. Now, because we call it an artificial person, as a person signs the deeds or the agreements, in the same way the company also signs the deeds or the trust by way of putting up their common seal on the agreements. The common seal is basically that signature of a company, that signature of an artificial person. So these are the 4 main points of what a company is and defines the company in the shortest and best possible manner. Now, some examples of companies in India are Tata Iron and Steel Company Limited, Hindustan Lever Limited, Reliance Industries Limited, Steel Authority of India Limited, and Ponds India Limited. And there are many names to go in case of number of companies in India. Starting up with the characteristics of a company, the first characteristic is artificial legal person. Now, it is created by law and can enter into contract as a person, as a normal person can enter into a contract. In the same way, a company is seen as an artificial legal person recognized under the law, the Companies Act, and it can enter into a contract, and as a person, as an artificial legal person, it can sue in its own name and can be sued. The next characteristic is incorporated body. A company must be registered under Companies Act. It's a rule that you have to register your company under Companies Act. It is incorporated properly with proper filings, rules and regulations under Companies Act. And the property purchased out of capital of shareholders, it belongs to the company only. Yes, it is of the company. The property, the assets, everything, it belongs to the company because it itself is an artificial legal person and an incorporated body. The next characteristic is capital divisible into shares. Now, the shareholders bring in the capital, that is the share capital, and the share capital is further divided into shares to be given to each and every shareholder, and a share is an indivisible unit of capital. The next characteristic is transferability of shares. The shares can easily be transferable from one shareholder to another. If a person thinks to sell his shares and get his money back, he can do that. Or if somebody wants to buy his share, he can do that as well. It is as simple as that, and the shares can be bought and sold in stock exchange. The next characteristic is perpetual existence. As I have told you earlier also, a company, it has an independent and separate existence distinct from its shareholders. The shareholders are not, the life of shareholders cannot affect the perpetual existence of a company. As I have told you, shareholders may come, shareholders may go, but the company goes on and on. You cannot say that the death of a shareholder will never affect the existence of a company. It has a number of shareholders and they do not affect the existence of a company. Company is that form of organization which goes on and on with its own work, with number of shareholders coming in, number of shareholders leaving. So the perpetual existence of the company is not affected. The next characteristic is limited liability. Now the liability of shareholders, it is limited to the extent of face value of shares held by them. It has nothing to do with their personal property, with whatever they are earning. It will never be affected in that way. If in case of loss, the company will just, the shareholders will just lose the extent of the shares they have put in the company. That's all, nothing else. The next characteristic is representative management. Now the shareholders, they are actually the owners of the company. The ownership lies in the hands of the shareholders, but they are not allowed to manage the company. For managing the company has a management. For that, the shareholders elect their own representatives. They elect the representative management of the company, which is called the board of directors. They carry on the business, they manage the business for benefiting the shareholders. Now, there are three forms of companies. First, private company, second, public company, and third, and the newest of all, one person company. Starting up with the first form of company, that is private company. Now the private company is a company in which all these things, all these features are very important. The first is maximum number of members. The maximum number of members, it is limited to 200 members other than present and past employees. The present and past employees are excluded, but other than that, the private company can only have 200 members. Then the minimum number of members, very important. To create a private company, there should be at least two members, and in case of one person company, there should be at least one person. Then transferability of shares, and as it is a private company, the members are less, the privacy is there, the right to transfer shares, it is restricted. And the last one, prohibition to invitation to public. The invitation to public to subscribe to any securities is prohibited. The private company does not invites the public for its shareholders or for its securities. It is limited to just few number of members only. So these things where come together, then only a private company exists. Now, what is a public company? The meaning is given. Now, as per the Companies Act, a public company is a company which is not a private company. This is the basic definition of a public company which is given under the Act. So, how would you know what is a public company? It's a company which is not a private company. Then it has minimum number of members. The public company should have at least, it has 7 members, and maximum number of members, there is no such restriction because it's a public company, public is involved. There is no such restriction in such company. That is why the points or the features of a private company is important, because whatever the points, if they are not complied with, if they are not there, then only that company will be called a public company. Then comes the foremost and newest form of company, that is called one person company. As the name suggests, one person company, it has one person as its member. Now what are the applicable restrictions on this form of company? Now all the restrictions that are applicable to private company, it shall apply to the one person company. Nothing different, nothing more or less. It's just that the number of members. Other than that, all the restrictions that were on the private company will be applicable on OPC as well. Now we will study the advantages of a company. Starting with the first advantage, greater permanency. Now the life of a company, it is not affected by the death, disability, insolvency or disagreement of shareholder, as there are a number of shareholders and I have been telling you again and again that it is a saying that shareholders may come and go, but the company goes on. Now, as compared to the other forms of organization which we have studied earlier, this form of organization, company, has a greater permanency, as it is not affected by the death, by the disability or insolvency of its owners, which are shareholders. It just goes on and on. The work doesn't get hampered by any of these things. The next advantage is limited liability. The shareholders have limited liability to the extent of their investment. In case of loss, in case of any problem which is faced by the company, the shareholders are not under the obligation to sell their personal property, to attach their personal things. They will just lose their investment. That's it. The next advantage is easy to transfer ownership. Again, the same things. The ownership transferability is very easy. The shares can be transferred through the share brokers. The shares can be bought and sold easily through the stock exchange. The next advantage is attraction of huge capital. Now, the companies divide their share capital into small denominations in order to attract capital. It is not necessary that all the shares are to be owned by one person or two persons, a person, and there is no limit, even the minimum limit to buy a share. A person can buy one share, also two share, three share, whatever his pocket allows. So in that form of business, more people come in with their own extent of investment, and that way the company attracts huge capital from the shareholders. The next advantage is management functions. Now, the company employs specialists in order to do specific work under the supervision of directors of the company. The company employs special people, the special experts, the professionals to do the specific work. For finance department, the company has the finance experts. For HR department, the company has HR experts. So this form of organization, the management functions in a very efficient way, because all the people who are coming up and managing the work, they are specialists in their own fields. The next advantage is recognized legal entity. Now, it is a recognized legal entity under Companies Act. It can enter into contracts, borrow money, open banking accounts in its name, as well as it can sue and can be sued. The next advantage is higher profits. Now, due to large capital, the company can invest in good machinery and produce better results, which conclude in higher profits. Now, the company has better technology, better management. Everything is in a good way with large capital, which will result in higher profits. The next advantage is benefits of large scale production. Now, because the company has large profits, good management, it also benefits the opportunity to enjoy all the economies of large scale production. The next advantage is bold management. Now, as compared to the organizations we have already studied, sole proprietorship and partnership, this form of organization, it can take big risks. It has big capital, the management with experts, so it has that capability of taking big risks. The next advantage is spread of risk. The risk is distributed among large number of shareholders, which is an advantage to investors. And at the time of risks, at the time of losses, it is divided among all the shareholders. It's just not one person or two persons who will be facing the risk. It gets spreaded and it is advantageous for the investors. The next advantage is democratic organization. Now, the shareholders, they elect the board of directors in a democratic way. They are elected in a legal way, and the most eligible people are elected as the board of directors of that company. Next is full legal cover. Company is a form of organization in which all its activities are legally monitored. They are under full legal cover. Now, it's fully covered legally from its birth to its liquidation, and in between whatever the activities are happening, they all are legally verified. Then the next advantage is social benefits. It is also beneficial to the society at large. The persons of low income can also invest in the company in a very productive way. So these of all were the advantages of the form of organization that is called company. Now, talking about the disadvantages of a company. The first disadvantage is formation of a company complicated. Now, the formation of company has lot of legal activities that consumes time, energy, and money. The formation of a company is very difficult. It has a lot of legal issues, the incorporation, the registration, a lot of form filings, you need to have a good expert for all those things. So the formation is a bit complicated in terms of this form of organization, that is company. The second disadvantage is double taxation. The company is taxed doubly in a way that it pays tax to government on its earnings, and the shareholders also pay tax on its dividend. So it comes under double taxation. The next disadvantage is exploitation of shareholders. Now, mostly shareholders don't know each other. One person is investing from one place, the other from some other city or from some other place. Now they don't know each other, and most of the shareholders, they don't go and attend the annual meetings. A person who's having 5 shares or 10 shares will not go to attend the annual meetings of that company. So they don't know each other, they are helpless, and the concentration of control, it goes in few hands. The shareholders who earn, the shareholders who who hold the most number of shares, the major number of shares, are actually the proper controllers of that company. So the concentration of control in few hands, it leads to exploitation of helpless shareholders. The next disadvantage is separation of ownership from control. Now, in a company, ownership lies in the hands of shareholders, but control lies in the hands of directors or the management. The major motive of the management of the company is always to do the work, to carry on the work in such a manner that it is beneficial to the owners of the company, that it brings more returns to the owners of the company, that is shareholders of the company. But there are cases when managers, when directors, they exploit the company, they don't work properly or they work inefficiently, which can exploit the helpless shareholders, which can exploit their share in the company, and they don't get proper returns of their earnings. The next disadvantage is promotion of frauds. Now, if the promoters are dishonest, they can exploit the shareholders, and the window dressing of the prospectus often misleads the investors. There are cases where there are fraud companies, they mislead the investors, take their money, and run away. So, in case the promoters are the people who promote the company before its formation for the investment from the investors. Now, in case they are dishonest and they make a prospectus, the window dressing of prospectus means they make a false prospectus with false goals, false objectives, false promises, which misleads the investors, and the investors, once they invest it in the company, then they run away, or the company just doesn't work. The next disadvantage is stock exchange speculation. Now, the reckless speculation is harmful to the interest of the shareholders and for sound investments. In some cases, yes, the stock exchange speculation is there. The interest, the shareholders lose their money badly because of these things. And these things happen in today's era. The next disadvantage is lack of secrecy. Now, the management has to make an annual report, net profits, assets, liabilities, they have to report everything to the MCA. So everything of a company, the company's net worth, the company's profits, losses, everything is known to everybody, and the competitors know everything, the employees know everything. So there is no secrecy in this form of organization. The next disadvantage is impersonal relationship. The feeling of separation between employees and employers, they are widening. Now the relationships are more impersonal, and this form of organization, it does not comes up with very good relations with each and every person. They are just minding their own business, and the relationships don't count in this form of organization. Now, the next disadvantage is favoritism and nepotism. Now, the directors, managers, they can appoint their near and dear ones at key positions who are not even eligible. Now, talking about favoritism, it goes everywhere. The managers, the directors, they make such advertisements, or they make such vacancies that their near and dear ones fit to it. And nepotism, it's just not in Bollywood that nepotism exists everywhere in every field. So the son of the manager or the daughter of the directors, they are given some prestigious positions for which they are not even eligible, taking up the opportunities of merit people, taking up the opportunities of eligible people who can be appointed there. The next disadvantage is grouping for power. Now the management is in the hands of a group which acquires the controlling shares. So they work according to themselves. They don't work for every shareholder or every investor. They just work according to themselves, and they can even take up all the money and run away. The next disadvantage is evils from the social point of view. Now, there are evils like the influential shareholders, they provide financial assistance to political parties and government officers to save their company, to save the illegal activities they have been doing up in the company. They sometimes, and some shareholders, the influential shareholders, they provide money to political parties so that their companies don't get blacklisted or they don't face any problems, and to government officers, just to keep themselves from any harm, just to keep themselves from any actions taken up by the government. So these were the disadvantages of the form of organization that is called company. Now the suitability of a company, which businesses suit to be worked in this form of organization. The first is where the volume of business is quite large, because companies are working at large scale. It manages the business at large scale, so the volume of business should be large. Next is where the area of operation is widespread. Next is the involvement of risk is heavy, as there are number of people owning the business, number of people managing the business. Definitely the involvement of risk is heavy. Then only the sole proprietorship, HUF or partnership cannot take up lot of risk. The next is where there is need of huge financial resources and manpower. Definitely when you need lots of money, you bring in the shareholders. For management, you have managers, you have proper directors, proper employees working on them. So there is where in the type of business where you need lots of money and good experts, then that should go in company. The next is where there is need of professional management and flexibility of operations. Again, the management should be professional. They should be experts in their fields. They should be skillful people. In those cases, for the suited form of organization is company. Thank you for watching my video. Please like, share, comment and subscribe. Don't forget to subscribe and press the bell icon, and for all the CS Foundation related videos, stay connected on my channel.